Good afternoon, everyone. I'll call to order the Finance and Labor Relations Subcommittee. Are there any disclosures of pecuniary interest and general nature thereof? None.
Chair, my sincere apologies. I don't have 3:30 yet on my computer, and I'm just still preparing the live stream. If you could just hold for 1 second.
I will. I'm sorry. That was only a test.
And Tom, we don't actually have Megan Callahan from.
Okay, that's fine. Whoever is here.
Now we're on.
Yep. Good afternoon, everyone. I'll call to order the Finance and Labor Relations Subcommittee. Are there any disclosures of pecuniary interest and general nature thereof? None noted. Item 4 is the 2021 insurance renewal, and we have Rick here. Rick, I'll turn it over to you. No, first of all, we have a motion that Rick Orr be heard. That's moved by Councillor Beattie, second by Councillor Gaffney. All in favor? Mr. Orr, you have the floor.
Actually, I think Megan Callan was supposed to be on the call. She had a presentation from BFL, and you don't see her in the waiting room anywhere.
In the council chamber, I guess they would know if there's something happening. I can't tell.
Okay. Can you defer us until later in the agenda, and I'll find out where Megan is? I'm sorry.
Sure. That's fine. Okay, we'll go to 4.2, the 2021 employee benefit overview, and we have a staff recommendation that we have a presentation from Posey and Mosley be heard, and that's moved by Councillor Bunting and second by Councillor Gaffney. Welcome, Susie. We actually can't hear you yet. Are you on mute by chance?
Megan is here now, Rick.
Unfortunately, we have no voice.
Susie, if you scroll to the mute little microphone button in your left corner, there's a little arrow. Then there should be either some options to select a microphone. You may need to select a different one. Still can't hear you.
Do you want to go back out and then we'll come back to you a bit later? Would that be okay, Susie? Thank you.
Tom, we've got Megan on the line now.
Okay, well, we've already have a motion to hear her also. So, Megan, if you want to go ahead.
Hi, everyone. I just want to make sure you can see and hear me.
Yes, we can. It's perfect.
Okay, great. Apologize for being a few minutes late. I always have difficulty with technology. So.
No problem.
So now that Megan's here, I'll just really quickly introduce Tom. Thank you for inviting us. Rick Orr, I'm the local broker on the insurance account for the city of Stratford. BFL is the broker under managing agent on the account. Megan Callan is a senior vice president of something. I don't know what your title is, Megan, but it's very impressive when we get there. And Wendy and Janice had asked if we could do a quick presentation on the state of the insurance industry and municipal insurance industry. So Megan had sent out a presentation. I'm not sure if we're sharing screens to do that, if we're just going to go through the presentation that you guys have.
I believe we all have the presentation, Rick. So if you want to go ahead, that's fine.
Okay, Megan, I'll turn it over to you.
Great, thanks, Rick. Yeah, and my title is not that impressive, to be honest. It's just words behind my name. Doesn't matter. You know, the insurance market is incredibly challenging right now. When we, I think, spoke around this time last year, or perhaps a little earlier, we were certainly starting the conversation around, we were seeing that the market was in a state of correction. We were starting to see that rates were being increased, premiums were being increased. And then when 2020 hit, it became a fully hard market. And we thought it would be prudent. We did have a webinar for all of our clients at the beginning of October to talk to everyone about what is a hard market, what does it mean, because we haven't really gone through one in a long time. So we thought it prudent to throw the doors open and talk a little bit about, what these terms mean and what impact does that have to insureds. My presentation is, short and sweet. We're talking about the insurance market in 2020 and then how that relates to municipal risk. Slide 4 is where we get into the meat and potatoes and defining what a hard market versus a soft market is. A soft market is categorized or characterized by insurers focusing on top line growth and market share. There's extensive capacity in the marketplace because insurers are looking to get into lots of different classes of business, lots of different insurance products. There's flexible underwriting requirements and parameters. We see very competitive premiums because if insurers want larger market shares, if they want to grow, they do have to offer competitive premiums. There are low deductible requirements and there's a broad product offering. And really, obviously, in a soft market, the insureds or clients or purchasers of insurance are definitely benefit from that type of market cycle. When we talk about a hard market cycle, the insurers are now focusing on, they've moved into an era of focusing on profitability and bottom line results. No longer are they consumed with top line growth. They want to understand the profitability of their books or their portfolios. There's reduced capacity. Now insurers are taking a hard look at what types of classes of business do they want to write? And then if they want to write a certain class of business, what kind of product offerings do they want to put forward? There's a return to disciplined underwriting, insurers taking their time, they take a deep dive onto clients, and they want to understand everything from the operations and services to your property, and they want to understand, just like you would have on your home insurance where they look at the construction of your building. They're really taking a deep dive into construction, fire protection, occupancy of buildings. Premium is charged that's commensurate with the risk. Insurers are looking at deductibles to make sure that they feel that they are not artificially low and that they're healthy, that they are commensurate with the risk that's being insured. And then there's reduced coverage offerings in the sense of insurers may carve back wordings, and it may not be as broad as they have historically been. The next slide gives us a bit of a timeline. We've been in the soft market for an extended period of time, 2001 to 2019, a very long period of soft market conditions. There was a brief hard market in 2001 after 9/11, but that really only lasted for, a couple of months, whereas this current hard market cycle, we've seen it since January 2020. And while no experts have crystal balls, they're foreseeing that to continue on through 2021. So why are we seeing a hard market, and how do insurers move through the cycles? And really, when you have a prolonged period of soft market conditions with those lower premiums or lower deductibles, that doesn't change the claims experience. And so the global insurance market has experienced significant claims year over year over year. I know everyone, gets sick and tired of hearing us in the insurance industry sort of, beat this dead horse, if you will. But certainly, we continue to see the natural catastrophes, the natural events, whether it's hurricanes, so hurricanes with wind, fire, flood. Consistently, the global insurance market has taken a beating from those types of claims. And so we're seeing the large losses, we're seeing the low premiums, and we were always going to come to a head, which naturally pushes the insurance cycle too hard, where the insurers need to start thinking about what their profitability looks like. And what really pushed us over the edge as well is that insurers have two basic sources of income or revenue, right? There's the premium dollars that they collect, but they also can invest some of their income. And right now, with interest rates being artificially low, the insurers aren't able to offset their underwriting, their underwriting losses by investment income. So those sort of large claims and low loss of investment income has contributed of moving us into the hard market. I've heard some people talk about, is this COVID-19 related, pandemic related? The market was in a state of correction in 2019, and certainly we saw hard market conditions at the beginning in Q1 of 2020. So COVID isn't the reason, but it's also not helping the matter. But certainly it is not what precipitated the hard market in January and February. So you were thinking, what do market cycles have to do with me? Well, as a municipal risk is challenging and unique to begin with. You are a unique risk. You are a challenging class of business for insurers to write. You have a wide scope of operations. And, I have an old boss that used to say that, municipalities are very interesting to work on because you do have such a wide scope, and that, you touch everyone all the time. When I get up in the morning and I walk my dog or pick up my mail or drive to work or drink my water or put my kids in soccer, that's all I drive to work. That's all municipal operations. Whereas someone has to buy a Coca-Cola product in order for there to be an exposure. You touch everyone's lives all the time. And that's why it makes it, a challenging class of business for insurers to really understand and wrap their brains around. You're responsible for all emergency services. You have large vehicle fleets that include transit. You have large property exposures. If you think of your own just home insurance or an individual manufacturing account, they would have one location or two locations, whereas you have multiple locations spread out around your town with high value dollars. You can have accumulation of assets at one location. If you have a fire hall, not only if there was a fire loss at the fire hall, which always sounds amusing, but we've actually paid losses where the fire hall is burnt down, is that it's not only the building itself, it's all the equipment in the building, those $1 million fire trucks in the building. And so an accumulation of assets, when insurers are evaluating your risk profile, those are things that they take into consideration as their probable maximum loss at any one location. Municipalities can have older assets, frame buildings, whereby they're not as fire resistant as a new build. So should a fire loss or a windstorm happen, it's more likely that it will be a larger loss. You have the complexity of water and wastewater treatment plants. You want to make sure that the operations that you're offering your community, that they're vibrant, that you have these large special events, that you're meeting council's expectations, you're attracting new businesses to your municipality. And at the end of the day, your claims can be complicated and have what we call a long tail liability. And when we use that phrase, it means that from a liability perspective, right? So if someone is suing the municipality for bodily injury, let's say, and this claim happens in 2020, we know about the claim in 2020, but the average lifespan of that type of claim is that we don't really know how that claim is going to end up for 5 to 7 years. That's what we mean by a long tail. From a property perspective, a building burns down, we know what that's going to look like in that policy year and done and dusted. Whereas a liability claim, we have a claim submitted, but then we've got to go through the investigation, we have to go through discoveries, perhaps mediation, etc. We also have the issue of joint and several liability, whereby municipalities, if they're found 1% liable, they could be on the hook for 100% of the judgment. that's certainly a challenging roadblock for insurers. And then, of course, case law with precedent coming before us, where judges can be quite, they are looking to make victims whole, which of course, we are 100% behind that if the municipality is negligent. But we've certainly seen through various court cases, et cetera, that they certainly can find creative ways to find municipalities liable. Again, if we're negligent, we absolutely should be paying, but it shouldn't be that if the municipality is 1% liable, that you're stuck on paying 100% of the judgment. I think I'll skip. Sorry.
No, go ahead.
Really, I think just skipping down to page 10, and how insurers are reviewing your risk in a hard market. They really are taking a look at 10-year loss histories. Even 2 to 3 years ago, insurers were okay at looking at 5 years. Now they want 10. They really want to understand how a municipality's insurance program performs. And then we have some of those blocks there around what the liability and property insurers are. Just again, they're taking that deeper dive into what you do and how you do it. What kind of risk management do you have in place? What do your assets look like? Construction of your buildings, fire protection, etc. And I have the one slide, and you already have that, this piece. So again, I don't necessarily want to drone on if you've already read it, and want to make sure that I have time to answer any of your specific questions. But, municipalities, the hard market is definitely affecting municipalities. We have seen that the tender process, which is always important, municipalities have to have that. But a tender process in a soft market drives rates down. And so when you're a challenging class of business, we become more vulnerable to the market correction. And so we're just really, working with insurers, advocating for our clients, and, getting best possible pricing on renewals.
So Tom, just before you get into questions, we've spent a lot of effort this year, giving a lot of details that we really haven't gotten into before. Wendy and Janice have been working on spreadsheets, getting every little detail in every building and location to up to the underwriters. We don't have pricing yet. I know Megan's got some, I think she's seen a few prices start to roll in, but we're not here to talk about what a price is, but we are talking about that there is going to be an increase for sure.
Rick, I was going to ask, is everyone like Cowan and different other suppliers, is it all the same? Like, could you talk about that a little bit? Obviously, we changed insurance.
Yeah, so we did talk about it. You're right. We changed to BFL 2 years ago, and we still do a lot of business with Frank Cowan, and I speak with them regularly. They're undergoing the exact same thing. They're looking at 20 to 25% increases on most of their renewals. So even, if that's what we see this year, BFL's already 20-25% below that. So if they take theirs and Cowan's take theirs, we're still below where we would be had we stayed with Cowan a couple of years ago.
Okay, thank you. Carry on.
And I think, I do have, part of when we really started seeing this hit in the spring and summer, I live in the insurance world, but I wanted to talk to my municipal clients or people who are not necessarily my clients, but I've worked with them in the past, and they have risk. Those municipalities have risk managers at their on staff, and say, okay, what are you seeing out there? And I can share this information because it's public. But we were seeing, my understanding is that, the city of Toronto, they saw 146% increase on their property this year. The city of Mississauga saw a 186% overall package increase. Simcoe County saw a 36% overall package increase. And the city of Ottawa, who had the very large transit claim that I think everyone would be aware of, the OC Transpo, and unfortunately the class action lawsuit that's happening there, they went from a $6 million total package premium to just shy of $12 million package premium this year. It's the first time that I saw, now this is my competitor. None of these are BFL clients, by the way, so it's more of a sampling of what's going on in the market. And I do have to tip my hat to my competitor from the City of Ottawa's broker. I mean, that would have been a very difficult account to broke. The reason why it went so high up is that Frank Cowan non-renewed. They did not offer renewal terms to the client, which is the first time I've ever seen that. And the local broker did an excellent job of finding a replacement. Painful, definitely painful correction, but something that, as I say, I tip my hat to that broker. That would not have been an easy account to broker. So unfortunately, we're just seeing it everywhere. Interestingly, there were some new business opportunities to BFL, and we elected not to quote. And their losses weren't that good. You know, those accounts just really continued to struggle with their loss performance. We didn't quote, and some of those tenders were actually canceled because no one quoted except the incumbent.
No, the decent news, Tom, is that we've had pretty decent loss experience. We continue to exercise pretty decent risk control measures. Our buildings are in good shape and updated. You know, as far as an account goes, we're fairly attractive, and you know that's the pitch BFL presents to the underwriters also.
Yeah.
I'll open up if anyone else has any questions as we go along here. Has anyone got anything they'd like to ask of either Rick or Megan? Continue on, Megan, and if you have more to give us.
No, I mean, that was really,
Okay.
that was it for me.
Okay, thank you. Any other questions from any council member? Well, we appreciate you coming up, and hopefully you. It's always hard when you have increases like this with what's been happening with the pandemic and everything else. So it is a tough time for us, and that's the only reason we asked you. We hope you, if there's any chance of any savings, obviously we ask you to try your very best.
100%. I mean, it really is an unfortunate timing with the hard market and the pandemic, and we completely appreciate that budgets are going to be tight, and we're going to present our best terms and also some options for you to consider to see how best we can mitigate the increases that are coming down the pipeline.
Great. We have a staff recommendation that report regarding the City of Stratford's 2021 insurance renewal for the period December 31st, 2020 to December 30th, 2021 be received for information. Can I have a motion? Councillor Bunting, I believe, and Councillor Gaffney. I don't know if Martin got on or not, but anyways, if Martin's there. So we have a motion on the floor. Any other questions or comments on the motion? All in favor? That's unanimous. And we appreciate your time, Mr. Orr and Megan, and we'll talk to you again soon, I'm sure.
Thank you.
Thanks,
everyone.
guys.
Oh, Councillor Gaffney has a question.
No, I just wanted to let you know that Martin did contact me to say he's online by phone.
I see that, but I don't know if he's here now or not. I did get your message. Thank you.
I am. Can you hear?
Oh, you're here.
Can you hear me,
Okay,
Tom?
good, Martin. Any questions, Martin?
No.
Okay. Well, thank you very much again.
Okay, thanks, guys.
Take care.
Item 4.2, we've already had approval that Susie be heard, and I believe she's on the line. And I don't.
I'm hoping you can hear me.
We can.
Wonderful. My apologies. We all got new laptops, and we've had such a little kerfuff with getting them all working and on Zoom and Teams meeting. So thank you for your patience. I'm glad we got them in there. So basically, Susie Nichols from Mosey & Mosey. We are the advisors when it comes to your employee group benefits. I'm fairly new to the city of Stratford. I'm hoping you've all seen the document that we shared earlier last week in regards to the upcoming renewal that's taken in effect. I will briefly go through the document. I know time is limited, so I won't go through line by line, but I'll certainly point out the highlights, and please feel free to ask any questions during or after. I'm sure I'll be able to answer those for you. So we're going to start off with, when we started working with the City of Stratford, we actually conducted a marketing. And when we say we conduct a marketing, what that is we essentially take your business out to all the top carriers. So I believe at the time we took it out to 12 providers. So provides all your data, all your experience, your claiming levels, and they come back with rates. Whether they're competitive, underfunded, whatever the situation may be. At the time, your current incumbent, which was Manulife, came in at approximately a 2.2% savings, overall about $42,500. The other wonderful thing about that marketing is they were able to extend some rate guarantees for your life and your long-term disability, and that extended to a 30-month savings or rate guarantee. So that would bring you into March 1st, 2022. And then they rate guaranteed your health and dental. Typically, we only see guaranteed for 12 months, and they were able to guarantee that for 18 months. So I think essentially the whole savings in regards with the rate guarantee and with the marketing, there was about $120,500 in extended rate guarantees or savings per se. Once we did that, we really want to talk about your health and dental. So right now, we had submitted a projection back in September to you folks that was quite catastrophic. I'm sure you've seen it coming in at about a 20% increase for your overall benefits. Yeah. A little shocking. I have to agree with Megan, in the insurance world, whether it's liability or group benefits, there's been sort of an uproar when it comes to group benefits, particularly in the long-term disability and the life. Fortunately, we have those on rate guarantee until 2022. So essentially, this increase that you're seeing is strictly your health and dental. So when we talk health and dental, we are talking utilization based, right? For example, if you have $1 million in claims, you need $1 million in premium to support that. But on top of that, you need your administrative costs, your inflationary trends, and your expenses. So that's over and above. The numbers that we provided in the original projection were based on 10 months of utilization and claims experience, because we didn't have the completed 12 months of experience to sort of determine. And I have to say, with the pandemic, insurers were really not quite sure on how this was going to pan out and what types of impact it was going to have. Credits were issued through the city of to the city of Stratford from Manulife, covering off your dental, which I think it came up to just about $70,300. So if you look on page 2, you'll see that the credits provided were at about $70,350. So that again was not what had come off on the initial projection. So when we talk claims utilization, it was absolutely in the EHC. So I just want to point out the city's extended healthcare benefit was running at an incurred target loss ratio of about 103.5. That was adjusted to about 897 compared to the net premiums of 865. That was initially our determination or our factors based on 10 months. Billed premiums of $1,035,000 have been adjusted to about $865,000 of net premium. The billed premiums did not reflect any premium credits. So the credits that you received for the COVID, it didn't reflect that whatsoever. Another impact that we had on this particular renewal is your incurred claims. So what we call is your large amount pooling arrangement. Are you guys familiar? Are you gentlemen familiar or individuals familiar with pooling claims?
I'm not, I'm sorry.
Okay, so what pooling claims is, it essentially is the real substance of group insurance. It's very much like car insurance. You pay for this and you hopes that you never have to use it. However, if you do, it's there. It's needed, it's justified. So the city of Stratford has a stop loss protection of $15,000. What this means, if any claimant goes in excess of that 15,000, this is just related to drug costs, okay? Which is, 80% of your cost typically is drugs. So once an individual hits that $15,000 threshold, that then becomes the responsibility or the liability of the insurer. So that percentage that you're paying for that fee is that protection moving forward. At the time of your 10-month renewal, there was in excess of $159,484 in stop loss claims. I believe that was approximately 11 participants, so 11 members, spouses, family members, who are on some pretty catastrophic drugs, whether it be cancer treatment, MS, rheumatoid arthritis, Crohn's colitis. These are what we call specialty and biologic drugs that they can cost up to hundreds of thousands of dollars. So Stratford has that protection that if anyone's hit that 15,000, any claims incurred or any premium incurred over and above is removed from that claim. So at the time of the original projection at the 20% increase, we didn't have certain individuals hitting that stop loss. So that in turn was accounted for. Once they hit that 15,000, they now become the insurer's responsibility to pay for those differences. So we were able to see quite a difference in your EHC cost. I believe originally based on your 10 months, Manulife was looking at an increase of 30%. And today we've gotten that down to approximately 14%. I also wanted to mention, and you'll see noted in this report, another impact to your actual EHC is at the time of marketing, we did indicate to the folks at Stratford, when we do a marketing, typically there is market discounts. Obviously, carriers want to secure the business. They want to, it's not unusual for them to give a discounted rate in order to attain that business. It is common practice when it comes to group benefits. So originally, when we did do that marketing, we already established that your EHC was underfunded by approximately 9%. So again, that has had an impact on the projection. When it comes to your dental, I'll quickly review your dental as well. It was running at about a 91%. And again, with your credits and actual your claims for the last 2 months did drop significantly for both health and dental, and we were able to establish that with the proper utilization and the full 12-month capabilities of being able to see utilization, we were able to get that down to a 7% for your March 1st renewal. So aggregate renewal position today was approximately about a 20% increase, which would accumulate to about 382,700 for the year. Now our new projection, which can include, and we've now been able to include the full 12 months, we're looking at an approximate increase of about 10%. So pretty much split in half. Okay. Any questions thus far?
I'll open up for questions from the committee. I have a question. Is this happening to all municipalities, or like our EHC obviously was high? Is that unusual? And
it's not. It really isn't. And I mean, Mosey, we deal with about 297 municipal sectors. We only do public sector. We don't do private. So we typically, when it comes to EHC and dental, unless we have a crystal ball, it's very hard to determine what your utilization is going to look like, because we don't know employees and spouses and dependents' needs, right? They vary from year to year. So all we essentially have to go on is your previous 12 months, right? So, with that said, are you guys running high? Yes. We'd like to see it usually around the, 90 percentile when it comes to target loss ratio. However, you may not see that next year. It's very unpredictable when it comes to EHC. The manager there is really plan design. And again, when you're in a situation where we're dealing with several different unions, it's very difficult to sort of manage those costs and still, secure the integrity of the plan. I mean, you look at your stop loss protection, you have individuals that are exceeding $15,000 in drugs. That's a lot of money. We've actually had, not long ago, we had one claimant who had $1 million in drug claims. So these are things that are just really unpredictable when it comes to health and dental. I know we've worked with Jackie and Kelly and your group benefits team to minimize impacts when it comes to plan design. We put a lot of cost savings measures when it comes to the drugs. So you're on the right track. You're doing the right thing. Unfortunately, it's one of those scenarios where we just don't know. We do our best to sort of predict or project what those EHC costs are going to look like.
On the drugs, like obviously the cost of drugs keep going up. Are they always going out to market, like for drug, like after a drug's been patented for a while, and then after that, could you kind of explain?
Yeah. Yes, absolutely. Stratford does have protection in place, which is called prior authorization, as well as mandatory generic, which means individuals who require these very catastrophic, expensive drugs do have a prior authorization process to go through. And what this means is they're getting the lowest cost alternative if there is one. The unfortunate part is when you're talking specialty drugs and biologic drugs, there is no generic.
Okay. Parton, do you have any questions? I know I can't, if you have your hand up, I can't see it.
No, I don't, Tom.
Okay. Anyone
So
else?
I just wanted to, my apologies to interrupt. I just wanted to point out, because I know Janice had mentioned this, and I know it's been a conversation for a lot of our clients, is has the pandemic had an impact on your rates? No, I can say that at this point, it has not. The place it's hit most for most municipalities right now, and we are seeing catastrophic increases is in the LTD. So they're seeing probably 4 times the amount of LTD claims being filed due to anxiety, stresses, depression, people that have actually experienced the unfortunate of getting the COVID-19. So we've seen a catastrophic, we're seeing increases of 90% when it comes to LTD. That is where COVID has had an impact. Fortunately, the city of Stratford is still on rate guarantee until 2022 when it comes to the LTD. So essentially, we've sort of saved our bacon from getting those rate guarantees in the aspect we're not going to see that LTD rate move, which could have really had a significant impact on this actual renewal.
Thank you. Any other questions from the committee? If not, we have a staff recommendation that the report regarding the City of Stratford's 2021 employee benefits overview be received for information. Moved by?
So moved.
Moved by Martin and seconded by Councillor Beatty. Moved by Councillor Ritzman, seconded by Councillor Beatty. Any other questions or comments before we let Susie go? All in favor? Thank you very much. We appreciate your time.
My pleasure. Thanks for having me.
You're welcome.
Take care.
Bye-bye.
Bye-bye.
Item 5.1, the financial statement and commentary for Festival Hydro Inc. for third quarter ending September 30th. We have both Scott Knapman and Kelly McCann here, whoever wants to take the lead.
I'll take the lead on reporting this. I'm going to focus this time. There's a lot of commentary. We included a lot of detail, and I'm going to focus on the balance sheet. Starting with accounts receivable. Our accounts receivable balance is $2.3 million greater than it was in September of 2019, and there's a number of reasons for this increase. Specific to electric, water, and sewage receivables, the balances are up $1.4 million. Our past due receivables are only $143,000 for electricity and $87,000 for water and sewage. We are implementing through a regulation, a missed meter project, which is just a select group of our customer base has to be moved on to a specific type of meters with a specific billing. And in order to do that in our system, we had to switch their billing cycle. So by moving these 80 customers onto a calendar month billing cycle, we essentially shifted their receivables. That's impacting us by about $250,000. Also, the 2019 balance had a significant credit balance sitting in there that we paid out early in 2020. And so it is impacting the variance when comparing year over year. We also noticed when doing this variance analysis that our customers, a large group of our customers that typically would have paid their bill before the date. And what this means is it's not impacting our past due, but it's shifting the receivables that now we're collecting them after the month end versus before. Another item, so outside of the electric, water, and sewage receivables, in 2020, we do have a large $557,000 credit. This is just relating to deposits on billable work, and it gets adjusted into our deposit account at year end, but it is impacting in Q3, the variance. And we also have $70,000 of higher deferred receivables. This is a direct impact of the pandemic because we're seeing a lot more customers are moving into AMPs, which is basically a payment arrangement program. So we're seeing these deferred receivables increase as they move into that. The last variance, which is a significant one, 1.4 million, but again, it's an accounting entry that we weren't accruing this amount on our settlement in unbilled revenue and receivables last year, and we are this year. So you can see the offset when I look at the variance on unbilled revenues. I've got some commentary on due from Festival Hydro Services, Inc. The balance has increased since December of 2019. However, we expect most of that will be refunded through AVEN funding that we are receiving for the purchase of the DSRC equipment. Our payment in lieu refund of $157,000 has not been received yet. It is being held because we are being audited. Typically, we are audited every single year. It's just a matter of timing. The unbilled revenue, so this is the offset to that CEP accrual that you're seeing. It's actually less this year than it was in September of 2020 or 2019. Our regulatory asset balance has increased by 1.2 million since 2019. The main driver of this really is the global adjustment variance account. And as described in my commentary, we had several months in 2020 where the amount that we billed out to our customers was less than the amount that we paid the IESO. And that's just a matter of when we bill, we have to use the first estimate because that's the only estimate available. But when we pay the ISO bill, they finalized all of their assumptions and we pay the final rate. That variance goes into a variance account and gets disposed of, but we hold on to it for 2 years. So that's a significant impact on our cash flows. I've made commentary on bank indebtedness and accounts payable together because in this month there was a settlement, a large settlement item that if it had been settled in September, we would have been sitting in an overdraft balance of 1.9 million. Right now, the bank is in a cash position of $100,000. On the cash flow, I wanted to show what has been happening since December of 2019 and kind of group it all together. So at December 2019, we had an overdraft balance of 1.3 million. If that large settlement item on our billing had been set up in or had been settled in September of 2020, our overdraft balance would have been 1.9 million or 1.8 million. So it indicates we've got an erosion of cash of $500,000. And I've just listed in my commentary what are the items that are causing that erosion. So we've brought 3.3 million into income. We've repaid $400,000 on our loan principal. We've spent 1.8 million on capital to the end of September. We've paid 400,000 in dividends, and it leaves us with cash before working capital of 700,000. So you can see that the erosion of cash is strictly tied to our working capital items, the largest one being that variance account in the global adjustment variance, where we bill less than what we pay the ISO. On the income statement, I won't go through everything because again, there's a lot of details and I can answer any questions that you might have. But to the end of September, our net income was 1.4 million, which is $5,000 ahead of budget. On our distribution revenue, we continue to see the trend where our GS greater than 50 and GS less than 50 customers are coming in under budget. In total, to the end of September, we're running $150,000 below budget on revenues. Our other revenue is also running below budget by about $64,000. And this is due to less billable work being done so far in 2020. Our controllable costs, however, though, are $178,000 below budget to the end of Q3. And what I've done for the rest of the commentary is I've listed the most significant variances so that you can see some of the items that have been driven by reduced costs that have been driven by either conscious savings in terms of cutting things like training and conferences and travel, and some other savings that are happening just as a function of, you know, potentially fewer truck hours and things like that. So I don't know if there's any specific questions on an expense variance item. I can go into those in further detail.
Okay, before I ask for questions, I believe I forgot to the staff recommendation that the presentation by Scott and Kelly of Festival Hydro be heard, and that's moved by Brad, second by Councillor Bunting. So I'll open up for questions of Kelly. Kelly, I was going to ask, and you've explained it basically, but because of pandemic, is there a percentage? I know you've got a lot of stuff in there, but is there a percentage of how much our actual, how is it affecting our bottom line, like from on deferred payments and other things? Is there a percentage how that's affecting our bottom line, either for Scott or yourself?
Yeah, we haven't calculated an actual percentage. I mean, I think what we're seeing on our income statement is that while our revenues have been impacted, we have seen our commercial customers have lower usage in the year. So obviously that's due to shutdowns that occurred because of the pandemic. But what we're seeing is that those revenue reductions are being offset directly by expense reductions. And so our net income at the end of the day, we're running essentially right on budget. The balance sheet items, the working capital items, some of those are pandemic related, but I would say the majority of those are not, and we would have seen them anyway. The variance account being a specific example.
Great. So any other questions? Kelly, if you anything else you want to bring up on the Festival Hydro Inc. that's significant for us, like dividends and stuff. We talked about dividends. I mean, it's elephant in the room, obviously. Like, how is it going to affect our dividends to the city of Stratford, or is it too early to tell?
Well, no, actually, we're in the process right now of preparing our 2020 projections and our 5-year budget plan, which will be going out to our board of directors on Friday. And we have a board meeting next week to discuss those items. So at this point, that's where we're at. Like, we are in the planning process, and we are looking at where we're going to land and, you know, what those dividends may be.
Okay.
Following that board meeting, we'll be in a better position to give guidance.
Well, thank you. Anything else? Martin, do you have anything? If not, we have a staff recommendation that the Festival Hydro Inc. financial statement and commentary for the period ending September 30th, 2020 be received for information. Moved by Councillor Bunting, seconded by Councillor Gaffney. You both put your hand up same time. Any other questions on Festival Inc., Hydro Inc.? All in favor? That's unanimous. We'll go on to item 6.1, financial statement and commentary for Rhizome Festival Hydro Services Inc. ending September 30th. And I need a motion that Scott and Kelly of Festival Hydro be heard. Moved by Councillor Gaffney, second by Councillor Beattie. Sure, you put your hand up, Councillor Beattie. All in favor of that motion? Kelly, you got the floor.
All right, Rhizome to the end of September. So our capital additions to the end of Q3 are $581,000. The bulk of this is the DSRC equipment that was purchased that will be funded through AVEN. Without considering that equipment that was purchased, our additions to the end of Q3 are 64,000 or only 22% of budget. We made a conscious effort to select some capital deferral projects just because of the uncertainty around the pandemic. So that is why we're only at 22% of budget. The commentary includes detailed description of some of the assets that were purchased and the purpose for that. Again, the amount due to Festival Hydro Inc. has increased since the end of 2019. This is due to the capital purchases that were made for DSRC. However, it will be refunded through the AVEN funding. We also see deferred revenue has increased. Again, this is when we receive the funding under IFRS purposes, it needs to be set up as deferred revenue and amortized into income over the life of the asset. So that is why that amount has increased as well. On the income statement, similar to other quarters, our revenues are running $46,000 lower than budget. This is mainly driven by consulting revenue, and it's an allocation of IT resources between Festival Hydro and Festival Hydro Services Inc. We had more services projects that were worked on in the year and therefore less consulting hours to Festival Hydro. In addition, we also had a conservation position that became vacant in February, so no consulting revenue there as was planned for. On the expense side, expenses are below budget by $171,000. There's various items that didn't come to fruition this year that were budgeted for, one of them being the lease of the test track. Our admin costs were under budget. We've not spent the money on advertising that we were anticipating, and our management fee is lower than budget. And also we have some maintenance costs, Wi-Fi maintenance specifically, that's running lower than budget, and that's just a matter of less maintenance work being performed on the wireless network than was planned or anticipated in the year. So that's it, unless there's specific questions on services or Rhizome.
Any questions from the committee? I was going to ask, I guess I'll ask Scott, is there any expansion ideas on the Rhizome, anything that would be coming up that you could talk about, or any ideas that
Yeah.
the Rhizome?
Well, one of the things that we're looking at right now, we're actually quite a ways down the road with a supplier, is to add cybersecurity to the DSRC network. So this would be an addition down its product cycle to make it a secure network as well. And that is one thing that's under consideration. I received the contract from the supplier over the weekend, and we're working our way through that right now.
Great, thanks. Any other questions? We do have a staff recommendation that the Festival Hydro Service Inc. financial statements and commentary for the period ending September 30th, 2020 be received for information. Moved by Councillor Gaffney, seconded by Councillor Bunting. Scott and Kelly, thank you for coming up. All in favor of the motion? That's unanimous. We'll talk to you again soon.
Good. Thank you very much.
Have a good day, everyone.
Bye-bye. Item 7.1, the 2020 annual report of the advisory committees, and we've had the reports in our package. Janice, I'll turn it over to you. Is there anything in there that you found was unusual or something we should be aware of?
No, these are just your standard reports for 2020. The Stratfords of the world, you'll probably notice, did not have their conference, which was supposed to happen in Stratford. And as far as I know, that is being planned for 2021.
Okay, thank you. We have a staff recommendation that the following 2020 Advisory Committee annual reports be received for information: Active Transportation Advisory Committee, Heritage, Accessibility, Energy Environment, Town and Gown, Stratfords of the World, and Community in Bloom. Do I have a mover to accept these reports? Moved by Councillor Beattie, second by Councillor Gaffney. Questions, comments? All in favor? That's unanimous. Item 7.2, the operating budget variance report as of October 31st. Janice?
So the report hasn't changed a lot since September 30th. We actually gained a little bit of extra surplus, maybe about $60,000 over the last month. But we also received our funding from the province, our $1.8 million. That was received in October, and that's why we're showing about a $3.5 million surplus at the end of October. We still have 2 more months. We'll report again at the end of November. We are finding that recreation revenue is not as it was planned. Transit ridership is not at 100% at this point. But that's the projection that we're looking at right now. We aren't planning to use any of that in the 2021 budget at this point. We do have some options. We have some reserves that we have not been able to put into, like parking. We budgeted to put in almost $1 million into the parking reserve fund in 2020, and that hasn't happened. So we may allot some of that money for that because that's needed for future infrastructure. So we aren't planning any of this because there will still be year-end changes for the 2021 budget. So if there are any specific questions.
Councillor Gaffney has a question.
Thank you, Mr. Chair. Do we see things like, and I don't mean to specifically ask just this one department, but things like transportation and recreation, do we see these things recovering moving forward, or are they probably going to stay pretty slow because of what we're hearing from our health officials and our provincial leaders?
It's hard to predict, I think, as we move into this second wave. I know in the 2021 budget, we are budgeting for less recreation revenue. We don't see it picking up, at least in the first quarter for sure.
Thank you.
Any other questions or comments on this report? We have a staff recommendation that the operating budget variance report as of October 31st, 2020 be received for info. Moved by Councillor Beatty, second by Councillor Gaffney. So no questions, I'll call all in favor. Thank you. 8.1 is the 2021 Council Committee Subcommittee schedule. And it's a long one if you looked at it. Staff recommendation that proposed 2021 Council Committee and Subcommittee meeting schedule be approved and that staff be directed to schedule meetings accordingly. Moved by.
So moved.
It's moved by Councillor Ritzma, I think. And who wants to second that?
Oh, that's good. Oh, that's good. Wow.
Any questions, Councillor Ritzma? I don't think so. So like the schedule's there, we can't do, it's what we do every year. So I'll call the question, all in favor of the scheduling. That's unanimous. Our next subcommittee meeting is December 22nd, 2020 at 3:30 p.m. Is there anything else for finance the day before I ask for adjournment that anyone else wants to bring up? Councillor Bunting. I don't think you're turned on. So there you go.
Okay, just with respect to the schedule that we just approved.
Yes.
I take it that goes to council in case somebody else has got an idea that, hey, there's a conflict here or whatever. I take it that's the case, right?
Yes, it will go to council if a councillor has something that they want to or doesn't want to. And it can change, as we found out last year, and it's changed dramatically. But at least we need something. That's a good question.
Okay, fair enough. Thank you.
If not, I'll accept adjournment motion. Motion to adjourn. by Councillor Gaffney. Bunting wants to stay here. Councillor Keating will second it. All in favor? Thank you very much.